This is Satya Pradyuman of Cirrus Research. The latest issue of Global Positioning is just out. The title, Sell Side Behind as Earnings Uncertainty Reading Hints at Complacency. At the heart of this is the sort of topsy-turvy world we've sort of moved into in terms of the trade impasses that have opened. When we look at the forward estimates, we've begun to see analysts have begun to account for some of the slowdown that's occurring, some of the shortened shipments and so on. However, when we compare this period to another, let's say, global event, such as the pandemic, while does not appear to be anywhere as serious as the pandemic, what we have seen here is that the sort of dispersion in forecasts are fairly benign. So in other words, when we look at the US forward estimates, the dispersion in those forward numbers, they have picked up a bit, but they're nowhere near the levels that we saw back in 2020. In fact, if you look at Europe and for that matter, China. And so this, I think, presents some concerns if the assumption here is that the trade embargoes or trade war that's opened will end nicely. There is some percentage that this will stretch on longer than we think, and the system has already slowed given the indecisions of the last 3-4 months. If I look more within the boundaries of the current period, the dispersion really for the US is the Z-score for it is business as usual. Canada, Europe, it's one standard deviation, below normal. So moral story is that there is room here for analysts to get surprised. And so this is something that we think is a potential overhang for markets to really clear levels where they're at. In addition to that, the projections in the West have certainly begun to adjust downward. We've noticed in the last few months how the US estimates have begun to retrace ground, similarly with Europe. What is interesting, though, is that the business outlook for the Chinese firms have been really underwater for a few years, and in the last 6 months, they have begun to recover. It is curious that these estimates are actually ramping up higher in the face of this moment. So there is a real impasse, I think, in the making there, and it's something we're going to keep a close eye on. And then finally, we talked a little bit about how the rest of the world has begun to outperform US equities. And in the recent risk metrics report, we made a case that maybe it wasn't a sell America story, but instead that if inflationary expectations are picking up, which I think they are, it's possible that valuations matter more. And if you follow through that logic, the US is by far the most expensive market on the planet. Importantly, when you look down cap, the US small cap market is one of the most discounted it's been to large caps in a long, long time. This looks at the Z-scores for the US and all the other key regions. Notice that US and Europe, their discounting for smaller firms are about 2 standard deviations or worse. This is wildly unusual. Importantly, though, India, which has been a very speculative market the last few years, the smaller firms in India, which have recently sold down, those multiples are 2 standard deviations above normal to the blue chip sector. So in that instance, the blue chips in India may be very interesting here as some of these trade negotiations continue. If India were to win some of these discussions, then the Indian market looks especially attractive as well. So take a look at the full report, and as always, happy to take your questions.